Good afternoon to all. This is Dr. ICT FX. I'm in UG. So this is a show of my trade. It was a swing trade. So I'm going to show you how I was able to take this trade. So let me connect to another broker. Let me look for another pair here where I can show it very well. Let me get another broker like this one. This is our broker that we are having, that I'm going to use. I told you we always start with the monthly analysis, the monthly chart. Let's try to see what's showing us. The monthly chart shows that we are overall bullish. So if we are overall bullish, that means every single trade we are going to look for is going to be a bullish move. So what do we depend on when we are in a bullish moving trend market? So what we do, we always look for discount PDRs. Discount PDRs, these include order blocks, fair value gaps, breakup block, propulsion block, rejection block. So when you look at my chart, the white candle represents the bulls, the yellow candle represents the bears. So for me, what I normally do, I normally go for this yellow candle which represents the bears, and when I try to show you here somehow, when I put my cursor there, when you look at the opening price of this candle, which came at the high, which came at the opening price, which is at 174.20, and also the low of this candle, the wick, which came at 174.815, which is the exact opening price of this candle, the order block. So you can see that the opening price of this yellow candle supported the price here, so which pushed the price to go up. So the buy momentum continued. So it's the same thing that happened to this yellow candle. So look at this yellow candle, the opening price is at 176.237, and also when you look at the wick here, the low came in at 175.705, which is approximately the opening price of this yellow candle. So that's why I was trying to emphasize the down close candle as a normal support price. So this is our chart. So when I continue the daily, I continue to look for the PDRs, the discount PDRs during the retracements. So all of us, we know that the market always moves, like the bull market always moves. This one is not appropriate, this is the appropriate one. So the bull market normally moves like this, making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So for us, what we are always targeting for when we are in a bullish run, what we always target for are these points here, these points here, this lower low, higher low, higher low, higher low, higher low, higher low, higher high, higher high, higher high, higher high. So what normally happens is that during this price rundown, or what we call the retracement, we always have what we call like price delivery. Price delivery, like when you put a fib tool, this is my fib tool, during the retracement of this price going downwards here, what we normally look for, like when you look at this price level here at this higher high, price retraces back towards the equilibrium. Are you getting towards the equilibrium? So from the equilibrium it can continue down into the premium. So what am I trying to mean? Above 0.5 level is premium, below 0.5 level is discount. So for us to get this up run again, price must come either tap into the equilibrium level or go into what we call the deep discount zone. From the deep discount zone, what other smart money call the demand zone. In the demand zone is where we have our most important PDRAs, the order block, fair value gap, breakup block, comparison block, rejection block, and also basically those are the best PDRAs. So from there, so I was trying to show you what we're going to use there. So when you come to our chart here, the daily, I told you when price retraces, now let us try to use this one. We have a higher high from there, a higher low, a higher high, a higher low, and also a higher high. So I want you, like we are going to measure this price in this zone here. So when you come and measure our price here, when you look at this price, it came and tapped into our 0.5 level, which came into a price of 181.693. So, and another thing that supported it was this fair value gap within the equilibrium price level. So the fair value gap, the middle of it is called consequent encroachment, low of the fair value gap, high of the fair value gap. So price normally most of the times respect the consequent encroachment of the fair value gap, the high, and also the low. It can give reaction to those levels. So from there you can see price came, tapped into our fair value gap with the equilibrium price, and it continued up. So that is one of the examples. Let me try to erase these ones. So let us continue. So another thing, like when you look at those PDRAs, the higher the time frame, the more those PDRAs will hold price. So when you analyze this chart again, you can see we said that the last, like how can I bring it, like down closed candles, these the yellow candles represent bears. So when you look at this bear candle here, in simple terms it is called an order blow. Remember, in the recent videos on my YouTube channel I talked about this. What we normally label here is the opening price. Are you getting, my people? So this is the things I use to get something for my family. So I normally label it daily OB, opening price. And also a half of this order block. This is the main thresh daily OB, main threshold level. You can label it. So when you look at this order block, the down cross candle, price scale tapped in it to move the higher. So when you look at this candle here, it tapped in, formed a bear candle. Now the bear candle here becomes what we call a propulsion block, this bear candle here. So when you look at price tapped into this propulsion block, the opening price, and price continued up. When you try to look on the lower time frames, it's the same stuff. So my analysis and my entries are always clear, right to the point. So what we normally do when you get your order block, when you go back to the daily, when you get your order block, in case you wanted to take this trade, you target the low of the order block. So what makes this propulsion block more strong and hold it, like they can hold the price for some good long period, is that, remember, price first tapped into our last down cross candle, which is an order block. This down cross candle came into the opening price of this down cross candle. So this propulsion block now becomes too strong so that it can support price for the upward movement. So basically, I've tried to take you through my PDRAs, up to the recent price movements. The same thing when you come down here. I told you price always moves. Remember, we are in an uptrend. Price always makes higher high, higher low, higher high, higher low, higher high, higher low, higher high. So when you try to look at this price leg here, you put our fib tool down here. I remember telling you that price for the continued upward movement, price normally taps into the equilibrium level and also into our deep discount level or PDRAs. So what I want to explain here is that you look at this price here, tap it into our equilibrium level, try to consolidate there, but again it reached below into our deep discount zone, tapping into our order block, though it was not to the exact note of the opening price, but it was into the order block. After tapping into the order block, skyrocketed. So after skyrocketing, it continued to the upside movement up. So probably that is what I wanted to share. This is Dr. ICT FX UG. Subscribe to my YouTube channel for more content. I also trade using these lower time frames, but since it was a swing trade, I didn't look there much, but it was some good pure price action movement with clear levels. So as we interact more, we shall see that We can go to the lower time frames to predict the daily bias using the higher time frames. So have a nice time. We shall meet next in doing the video recordings.